Hello friends, welcome to today's session. This is CA Renu Tantry here. Today we will learn about few of the adjustment entries. This topic I have divided into three parts. So today we are doing the part 1, we'll be learning few of the adjustment entries. So let's start. To start with, let us understand what do we mean by adjustment entries. Now, it is an entry which is an adjustment. This is an entry which is passed because we are following accrual basis of accounting, and as per this we record all the expenses and the income related to the current year. So whatever is related to the current year, it has to get recorded in the book, so that in the financial statement the correct amount of expense is charged and the correct amount of income is taken, so that ultimately you will get the correct amount of profit or loss. And therefore these adjustment entries are passed at the end of the accounting year. So at the end of each accounting period, these adjustment entries would be passed. Now, why do we need to pass this adjustment entry? As I said, to determine the correct amount of profit or loss and to show the correct position of the assets and liabilities. So basically about the financial performance and financial position, if you want to have a true and fair view. Then to get a true and fair view of both the financial performance, that is in the form of your profit or the loss for the year, and in relation to your financial position, that is related to your assets and liabilities, we have to pass these adjustment entries. So after these adjustment entries are passed, when we prepare the financial statements, it would give you a true and fair view. So now we will start learning about the adjustment entries. The first adjustment entry for today is closing stock. Now what do we mean by closing stock? You know that in a business you purchase goods. If it is a trading business, you take example of a trading business, you purchase goods and you sell those goods. But as at the end of the year, there are likely to be some unsold goods remaining in stock. So those unsold goods which are still there in stock as at the end of the year, that is the year being from 1st April 2020 to 31st March 2021, then as on 31st March, as at 31st March 2021, there is likely to be some goods still remaining unsold. It is not possible that entire stock is cleared out. So there will be some unsold goods in stock, and that is called as the closing stock of the accounting period. Now, how do we value this closing stock? The valuation of closing stock is at cost or the net realizable value, whichever is lower. So net realizable value is also called as market value, whichever is lower, that would be taken as the value of the closing stock. So cost is what you have paid to acquire it. But what is net realizable value? Which is also the market value. If you were to sell this particular goods that is remaining unsold now in market, what would be the value it would fetch? And why net realizable value? In case in selling that product, if you incur some expense, we subtract that from the market value, and that net value would be compared with the cost, and whichever is lower would be taken for the valuation of closing stock. What would be the entry that we pass? The entry that we pass would be closing stock account debit to trading account. So when you learn the preparation of trading account, you would find that you have closing stock on the credit side of the trading account. Normally, this value of closing stock is given as additional information to the trial balance. So normally it does not appear in the trial balance. It is given as an additional information to the trial balance, and then this would be adjusted. So you would be showing it one in the credit side of the trading account. And there is going to be one more effect. Anything that is given as additional information to the trial balance will have two effects. First effect of this closing stock we have seen. The second effect would be, it would be seen in the balance sheet on the asset side as the stock, closing stock, or as inventory. Both mean the same. So at whatever value it has been valued, that value it would appear as an asset because it's still unsold. When sold, it will realize value. So this is how the closing stock, when adjustment entry is passed, would be shown in two different places. Hope that is clear related to closing stock. Now let us move to the second item for which adjustment entry would be passed. Now, that is outstanding expenses. Now we know that as per the accrual base of accounting, whatever is the expenses which are related to the current year, related to the current accounting period, so that has to get recorded. Then only you will be able to ascertain the correct amount of profit or loss of the business. But however, when we are recording, we record as the payment takes place in chronological order. But there is a possibility that there might be some item which might not be paid as at the end of the year. To understand this, let us understand with an example. Suppose we take an example of salary. Now, salary is paid to the staff. It is an expense which would go into the profit and loss account. So during the year, over the 11 months period, suppose rupees 1,10,000 at the rate of 10,000 per month has been paid to the staff. For the March month, for the work done in the March month, he is supposed to be paid 10,000, but this remains unpaid as a 31st March of that particular year. Suppose it is 2021. Why? Because when he works for the entire March month, that salary is normally paid in the month of April, which comes in the next year. So, although it is paid in the next year and comes into books as paid in the next year, still, is it not the expense of the current year? Once we know that it's expense of the current year, it has to be included. And that is why we pass the adjustment entry for the outstanding salary. So, what would be the entry that we pass? As it has to be included in the salary, we would debit the salary account, which is an expense account. So, expense account increases, it has to be debited. So, we debit the salary account. And as it is an outstanding salary, it has not yet been paid, it is a liability for the business. Liabilities, when it increases, it is credited. So, we credit it to outstanding salary account. So, the amount would be 10,000 debited to salary and 10,000 credited to outstanding salary. Therefore, the entry, general entry, if you say for all outstanding expenses, you would debit that particular expense account head and credit the outstanding expenses account. And where would this expense would get added to that particular expense, like the salary of 10,000 gets added to this 1,10,000 and goes to profit and loss account as 1,20,000. The other effect is related to the outstanding salary. This would be shown on the liability side of the balance sheet because this amount is payable to the staff and therefore is a liability of the business. So hope outstanding expenses is clear. Now moving on, one more we will learn today, that is prepaid expenses. Now these are the expenses which has been paid in advance. Prepaid means it has been paid in advance, means they relate to the next accounting period, but it has been paid in the current period only, paid in the current year, but relates to next year. So as it does not relate to current year but still it's getting paid, it should not be included in the current year expense. It has to be excluded and it has to be included in the next year to which it relates. and that is why we would be required to pass an adjustment entry to remove that expense, from that portion of the expense which is prepaid. To understand this, let us take an example of insurance premium paid. Now, it is not possible that every time you take insurance policy on 1st April, probably this business took out an insurance policy on 1st August of 2020 and they paid suppose rupees 12,000, which is a premium for entire year. So this is per annum 12,000, which means per month it turns out to be 1,000 per month. Now basically our financial year starts from April 2020 and goes on till 31st March of 2021. This is a current financial year. When did this get paid? It got paid on 1st August, 12,000 rupees. But it is for a period of 1 year. So the validity of that policy would be from 1st August till 31st of July of the next year, 2021. This is the validity period. Out of this, if you see, the period from 1st August to 31st March is related to the current year, and thereafter from 1st April to 1st July it is related to next year. So this entire 12,000 which has been paid here has to now be split between these. So let us calculate how many months in the current year. From August to 31st March, if you calculate August, September, October, November, December, January, February, March, it comes to 8 months. So at the rate of 1,000 per month, rupees 8,000 relates to current year. And then from 1st April to 31st July, it will be 4 months, April, May, June, July. So 4 months related premium, that is 4,000 rupees relates to the next year. So therefore, whatever, when insurance premium was paid, insurance premium was debited with entire 12,000. But out of that, we have to remove 4,000. So expenses, when it increases, it is debited. When it decreases, we credit it. And therefore, the entry that we pass would be prepaid insurance premium account debit to insurance premium account. 4,000. This way, out of the 12,000, 4,000 is reduced by way of crediting insurance premium account, leaving behind 8,000 related to current year, and therefore the premium related to current year is going to be charged to the profit and loss account, and the correct amount of profit or loss would be determined. But however, this 4,000 rupees which has been paid in advance will removed from the expense, but it has been paid in advance for the next year. So it is a sort of an asset. So when asset increases, we debit it. Therefore, we create an asset account in the form of prepaid insurance premium account and debit it with 4,000. That is why we pass this entry. So the general entry, if you say, you would debit the prepaid expense account. Whatever is the nature of expense, that expense you will replace this term, and you would credit the expense account to reduce the expense and bring it to only the current year period. So this is how we pass adjustment entry for prepaid expenses. I hope prepaid expenses is also clear to you. Now we will learn about more adjustment entries in the next videos that follow. If you found this video useful, then please do like, share and subscribe to my channel. In case of any queries, please feel free to leave them in the comment section below and I will get back to you at the earliest. And yes, don't forget to press the bell button to get notifications of the upcoming videos. Thank you. Have a great day.